The trade war, initially hoped by the United States to showcase its power and global dominance, forced them to swallow a bitter pill of destruction that shattered their hopes. China, threatened by tariffs and expected to easily yield, roared louder than anyone had ever imagined. Instead of submitting and negotiating like many other countries, China, having learned many lessons and resolved several challenges since the 2018 trade war, delivered a powerful slap to the United States, showing that China had surpassed the US in numerous sectors. In fact, China openly challenged the United States to engage in a brutal war across all sectors, from military, economy, technology, energy, and more. At this point, the United States made a crucial miscalculation, believing China to be a second-tier country. But secretly, China had reached a level of progress that silenced the US. Soon after, Trump imposed tariffs recklessly. Trade between the two nations, which once totaled over $650 billion, collapsed in an instant. Chinese-made goods became incredibly expensive in the American market, while US products became costly in China. However, the United States was the biggest loser in this trade war. We can see this in the case of Boeing, the iconic American aerospace giant that was once dubbed the king of global aviation for decades. Together with its European rival Airbus, Boeing dominated the global commercial aircraft market. However, the trade war and competition with China became a storm that caused this giant to falter. When Trump decided to raise tariffs on Chinese imports by 145%, Beijing responded with a deadly blow to Boeing. All Chinese airlines were instructed to halt purchases of new Boeing aircraft. Not only that, but China also urged its national airlines to suspend purchasing aircraft parts from American companies. This decision was a nightmare for Boeing, as China had been one of its largest markets. According to Boeing's projections, China would need approximately 10 new aircraft over the next 20 years, worth around $1.3 trillion. Boeing was expected to fulfill around 50–60% of this demand, meaning about 4,000 to 4,500 aircraft would be purchased from Boeing between 2019 and 2038. However, with China's decision to block these purchases, Boeing lost access to a massive market for dozens, even hundreds of new jets. Analysts warned that while Boeing could attempt to redirect production to other buyers, Airbus and other competitors would struggle to fill the gap left by Chinese customers. As a result, Boeing faces immense difficulties in meeting its production targets. Meanwhile, the agriculture sector in the United States was also hit hard. Since 2018, American farmers have been at the front lines of China's tariff retaliation. As the largest importer of soybeans, China targeted the heart of American agriculture by imposing high tariffs on soybeans, corn, sorghum, pork, and other agricultural products. The results were devastating. U.S. soybean exports to China plummeted by 75% in 1 year, from $12.3 billion in 2017 to just $3.1 billion in 2018. America's share of China's soybean market dropped from over 60% to under 20% as China shifted its purchases to Brazil and Argentina, leaving farmers in states like Illinois, Indiana, and Dakota with piles of unsold crops. Despite the U.S. government's attempt to provide billions of dollars in subsidies to support farmers, the damage was already done. In a 2019 congressional hearing, farmers reported rising debt, soaring production costs, and declining incomes that threatened the survival of their farms. The number of bankruptcies in the agriculture sector reached a 10-year high, and mental health pressures among farmers escalated, with reports of depression and suicides. This marked a crisis at the heart of American farming. The situation didn't improve in the following years. In 2020, China promised to purchase large quantities of American agricultural products, and while purchases did increase in 2020, in 2021, they failed to meet the target. By 2025, China's retaliatory tariffs of 125% effectively closed off access for American agricultural products to the Chinese market. China aggressively accelerated its diversification of imports, with Brazil now becoming the dominant supplier of soybeans. Moving to the energy sector, the U.S. was struck on two fronts: fossil fuel exports and clean energy competition. As the largest producer of oil and natural gas, The US had been aggressively exporting nice liquefied natural gas and crude oil to China. However, with every escalation in tensions, these commodities became political weapons. In 2019, China cut back drastically on LNG imports from the US, posing a 25% tariff. After some recovery post-Phase 1 agreement, the tariff of 125% on energy imports from the US in 2025 once again made imports from the US uncompetitive. Meanwhile, China easily turned to alternative suppliers like Iran and Russia, and ramped up long-term LNG contracts with Qatar and Australia. American energy companies lost access to one of the most dynamic and growing markets, while the US remains a net exporter of energy. Losing China as a customer had significant consequences. The prices of natural gas in the US dropped due to excess supply that couldn't be sold, negatively impacting companies in states like Texas and Louisiana. Likewise, the petrochemical sector, reliant on oil and gas exports, also suffered, and this signaled the decline of America's traditional energy dominance, exacerbated by geopolitical changes and China's search for alternative supplies. However, the most strategic challenge for the US came in the renewable energy sector. Over the past 2 decades, China has invested heavily in solar, wind, and electric vehicle (EV) technology as part of its industrialization drive. As a result, China now controls 70–80% of the global solar panel manufacturing market, with its share of the solar supply chain, including polysilicon, wafers, and modules, approaching 95%. Chinese companies flooded the world with cheap solar panels, forcing American manufacturers to either close down or only cater to the high-end market. Similarly, in the electric vehicle battery sector, China has become a dominant player, with companies like KTL being the largest battery manufacturers in the world, supplying both domestic and foreign car makers. Meanwhile, in the automotive sector, the United States, once the proud home of Ford, General Motors, and other automotive giants, saw its dominance fade, especially in the face of China's explosive automotive industry. In 2023, China became the world's largest exporter of cars, surpassing Japan. The shift to electric vehicles, EVs, has been a particular challenge for American car manufacturers, who lagged behind China in EV production. While Tesla, the American EV pioneer, is a leader, traditional American car makers struggled to adapt quickly. By 2025, the penetration of EVs in the US market was still under 10%, far behind China and Europe. This shift has directly impacted the American automotive industry, leading to a larger trade deficit in the sector. US manufacturers now import more vehicles and parts than they export. Additionally, traditional car factories in the Midwest are facing closures as American companies continue to lose global market share to Chinese EVs. The US automotive industry is now caught between a rock and a hard place, either continuing to produce conventional vehicles, which are increasingly outdated, or investing heavily in EV production and trying to catch up with China.